What if I told you there is one company that is quietly taking the lead in the AI boom? While everyone is talking about Nvidia, there is another company that is building the data centers to power the AI boom itself. And that company is Applied Digital, ticker symbol APLD. Now, I'm sure you've all seen graphs like this and pictures like this showing just how big Nvidia has become and how Nvidia is powering the AI boom. Even this one, countries whose entire GDP is now less than Nvidia's market cap. It's insane really, but as much as AI is dependent on Nvidia, it is also dependent and even more so dependent on data centers. And this is where Applied Digital comes into the picture. And this stock is booming right now, up over 167% in the past year. But imagine you had Nvidia stock 10 years ago and thought that Nvidia was done once it had ran 160%. Think about just how early that really was. Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. Applied Digital develops, builds and operates next generation data centers and cloud infrastructure in North America. Its data centers provide digital infrastructure solutions to high performance computing industry. The company also provides artificial intelligence cloud services, high-performance computing data center, and crypto data center hosting services. The company's purpose-built facilities are engineered to unleash the power of accelerated computing and deliver secure, scalable, and sustainable digital hosting, along with software as a service and GPU as a service solutions. Backed by deep hyperscale expertise and a robust pipeline of available power, Applied Digital accommodates AI factories to support the world's most enacting AI, ML, blockchain, and high-performance computing workloads. Looking at the investor's presentation, we can see that Applied Digital have a world-class management team with decades of experience across industry-leading companies. The company has been positioning itself for huge growth over the past few years, and that has now ramped up with over $5 billion in funding agreements to support data center development. AI demand is increasing, and so too is the demand for power. The demand for power has capacity expected to triple in the next 5 years, with hundreds of billions of dollars being spent annually by the world's leading companies. So this article was written just today. Undervalued and Ignored, 2 AI stocks with market-beating potential. And this lists Applied Digital as the #1 stock, citing that data center capacity could be increasingly difficult to come by in coming years, which is a huge opportunity for Applied Digital. As it says here, it's becoming harder and harder to find fast-growing companies in the AI market that are still undervalued. While chips and software companies are trading at high multiples of their earnings, the companies meeting the demand for AI infrastructure like data centers trade at attractive valuations. Now, it's not like Applied Digital is trading very cheaply or that the stock hasn't run yet, because APLD is valued now at over $5 billion, having run over 250% in the past 6 months. But that is coming from a near 52-week low, while the stock has gained over 165% over the past 12 months, which is not an insane run considering how much a lot of other AI-focused stocks have ran in this time frame. Anyways, the stock has surged over the past few months following the company's $11 billion AI infrastructure deal with Coreweave, which has validated the company's strategy to build data centers for AI. Now, leading hyperscalers like Microsoft and Google can certainly afford to build their own data centers. However, the demand for AI is accelerating and data centers require a lot of power, with a lot of analysts suggesting that there will be a power shortage, but Applied Digital has secured power for its facilities that will be increasingly valuable, which will allow the company to scale more rapidly and take advantage of the opportunity. But this is important. Applied Digital is in advanced talks that could result in another major deal in the near term, while it's in various stages of negotiations with others. To be this far along in negotiations is further validation of Applied Digital's value. It requires a lengthy and complex process to finalize these deals, but every deal it announces just compounds the company's future profit potential. The market is valuing the stock at just 6 times management's long-term operating profit target. The stock could double over the next few years, depending on how many more deals it announces. But what do analysts think of Applied Digital? There are 8 Wall Street analysts covering the stock who have given a consensus price target of over $19. There is 7 buy ratings and 1 hold rating. But the most recent ratings are the highest. While some analysts were rating this as $7 or $8 earlier this year, the most recent ratings are much higher, with Northland Securities giving APLD a $30 rating just 2 weeks ago. Applied Digital has set the date for the next earnings report and will be hosting a conference call on Thursday, October 9th at 5 p.m. Eastern Time. If you'd like to see a video where I look at the upcoming earnings report and analyze their previous earnings results to form an opinion on what we should expect, then drop a comment below and let me know. If I get 500 likes and comments on this video, it'll show me that you're interested in seeing the earnings preview. Now, this is a very good article on Seeking Alpha. Applied Digital's AI potential is huge even if the market disagrees. And this makes a lot of good points. Things like these are why I find this platform so invaluable when doing research. As always, I'm not going to spend 20 minutes going through this article in detail. I'm just going to look at a couple of main points. First of all, when it comes to AI data centers and their growth prospects, there is a major concern. Every single hyperscaler this year has either expressed how growth in their data centers is robustly buoyed by AI, but constantly constrained by capacity. So capacity is a major concern. But Applied Digital have made waves in the past 3 to 5 months as they pivot their business model to completely focus on addressing the capacity requirements of hyperscalers and HPC clients. And especially important is the multi-billion-dollar deals with Coreweave. Now, skipping down here to the importance of the Coreweave deals. Starting next year, Coreweave's contribution to Applied Digital's revenue base will play a significant part in the company's outlook. The agreement implies Applied Digital has to deliver 400 megawatts of future capacity via set milestones over the next 2 years, worth $11 billion in backlog for Applied Digital. Applied Digital could score $800 to $900 million of revenue by 2028. That implies a revenue compound annual growth rate of around 80% over the next 3 years. Now, as it says here, despite the risks that markets are pricing in, Applied Digital's potential to capture value in the AI landscape is significant. Coreweave as a customer represent the start of a significant revenue flywheel for Applied Digital, and I suspect markets will eventually come around to being even more bullish on Applied Digital. Now, while the majority of analysis on Applied Digital is very positive and bullish, and Wall Street analysts are bullish too, there are some analysts who feel that given the stock's huge run, that it could be due for a pullback. For example, Tech Stock Pros have written that gigawatt wars could get messy. This analyst points out that holding the stock in hopes of a near-term hyperscaler deal is too risky and ignores the potential downside if we see the current momentum around AI infrastructure spending slowing. Which is a fair point. The online capacity of 400 megawatts is maxed out, and it's a waiting game to bring the rest online without any execution issues. And the problem with the stock is not that it's overvalued, but that it's priced for perfection, leaving little room for any slip-up, competition, or any moderation in spending on AI data center capacity. Now, I'm not going to go into this article in any real detail as it highlights a lot of companies such as Coreweave, Nebius, and Microsoft, and everything that they're doing. And it highlights the valuation increases of all these companies in the industry, saying that Applied Digital is not the only game in town, but in reality, it's one of many players trying to get in on AI hype. But giving the bottom line here, that the stock has entered the high-risk profile at its current price, and that the RSI has been within the overbought territory for the past 2 weeks. But here's the bit that's important to me. Applied Digital could be on the verge of signing a huge deal with a hyperscaler to lease out data center capacity that's not yet online. There is little doubt that this would push the stock past its current all-time high of $25 per share. Having said that, This analyst thinks that it's speculative at best and too risky to add at current levels. Hence, we see an opportunity for investors to trim their holdings heavily at current levels. I don't agree with this because I do think that another deal will be coming very soon, and especially with the company breaking ground this month on the $3 billion Polaris Forge 2 campus, which is designed for 280 megawatts, with capacity to scale beyond that. This is scheduled for initial operations in 26 and full capacity in early 27. But guys, what do you think? How high can Applied Digital go? After all, the stock is up nearly 400% in just 5 months. Let me know your thoughts in the comments below, and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and comment, and I'll catch you in the